3, 2, 1.
My name is Nick. I'm a full-time trader and entrepreneur. We put out tons of stuff for free for traders. These are real trades. This is real money. I'm putting my money on the line. This is going to be a live trading video here, locking in over $1,000 on this trade. Wow, I'd love to get in on this. Technical insights that really look good to me. There we go. We're live. Well, good morning, friends, and welcome back to the show. Thanks so much for being here. We got people in the chat, as we usually do, to get these streams started. Sometimes I mention that, back in the day when I first started doing these live streams, I was in college. I was in my college bedroom. The quality of the videos were awful compared to what they are now. We've come a long way, and I just got to say a big shout out to a lot of you guys who have been watching with me for a long time. We've been doing market analysis and sharing ideas and thoughts together as a community for a long time, and I am so proud every day to be able to get up here and do that with you guys. So thank you for being here. Got a bunch of people in the chat. Shout out to my early bird people. What's up, Trey, Thabo, Ken R, Lemonade, Gerald. We got people in the chat already. So thank you to everybody who is here with me, hanging out this morning. Shout out to all you guys. I'm just trying to run through some of the comments that are here. So thank you guys. Glad that you're here. So we get some stuff to talk about. The dollar's coming down hard today, which definitely an interesting point. We could talk about that. We could talk a little bit about, some of the upcoming news this week. We talked a little bit yesterday. The big event, of course, today, I believe is inflationary numbers from Australia. And then also we do have that looming Fed meeting here in the middle of the week, smack dab in the middle on Wednesday. So has the potential to move markets as it usually does. And we are going to talk a little bit about that. I'm sure that I will put out some form of a video covering that. I usually try and cover the big events. If there's something big, I'll go do my research and put out a video for you guys to hopefully help out on that front. So where is everybody tuning in from? Do me a quick favor. If you're new to the streams or you've been here for a while, comment where you're from. Shane is here from Boston. My dad's family is from Boston. I used to go there all the time back when I was a kid. Great place, lots of fun. Can get really cold, but I love Quincy Market. It's a really fun place. We used to hang out there a lot when I was a kid. So shout out to my Bostonian friends. So cool. Somebody from South Africa, India, Buffalo, New York, the UK, Vancouver, India, Sydney, Australia, South Africa. Awesome. Kenya. Good to see everyone. Thanks for showing up. We got somebody from Canada, North Carolina, Baltimore, New Mexico, London, Miami, Namibia, all sorts of places. That's one of the coolest things about being a Forex trading, based YouTube channel is we got literally people from all around the world because it's in the name, right? It's in the foreign exchange. So cool stuff. Thank you guys for being here. Let's get into it. I know it's a long intro, but I like to give people just a minute to get in here. So the big thing I wanted to talk about today is going to have to be this US dollar volatility that we are seeing. I would say, let me get my stuff all set up here. So I will say when it comes to the dollar volatility here, I wanted to show you guys this one key technical break that we saw to the downside. So let me show you guys this on the actually, I think you can see it pretty well on the 4-hour chart. So we had this trend line here, right? You had this trend line here where buyers just seem to be wanting to hold this very tight for the dollar. Every single dip seems to be getting bought here. And then all of a sudden here, you had this ginormous breakdown and then the retest here being respected by sellers at resistance, kind of a key spot. And I want to zoom in on this candle here and show you guys what we're seeing. So the dollar is now threatening to make a lower low. It's also threatening to hold this trend line as resistance. And this pin bar looks so strong for sellers. Kind of a little bit of a different story than we're used to here. The dollar has been really strong for the last few weeks. So we're seeing this thing come in hot on the sell side, and you're seeing a little bit of rejection from the bears here. So is it time for the dollar to come crumbling down and head on back down to wherever it came from? Well, we'll have to see. Again, we do have that big looming news around the corner, the Fed meeting this week, which has the potential to really move the dollar. So I'm not gonna assume, oh yeah, it's down today, so it's gonna launch down to the bottom of the floor, because again, when you get that volatility from major news events, it has the potential to really move markets back and forth. Maybe we see the dollar up higher by the end of the week. Maybe we're forming a high for the end of the week. Maybe we're forming really, really strong lows. I think if the Fed comes into this meeting with their sort of standard right now dovish approach, it is possible that we could see some more bearish USD news. In fact, let me pull this up for you guys. I'm going to go to forexfactory.com, and I want to see, is there any clues about this upcoming event that we could look into? Let's look. So we have the FOMC statement. So if you're a new trader out there and you're like, what do you mean news? Well, Forex has very regimented scheduled news events that sort of impact the pricing of currencies. You might say, well, what about head and shoulders patterns and support and resistance? And although I do find those things to be useful tools, they are not the only thing. And in fact, they're not the only driving force that pushes markets up or down. Truthfully, the market rallies higher or lower based on sentiment, as well as based on fundamental news that is coming out. So speaking of fundamental news, the biggest event for this week is the Fed meeting that is going on. The Fed is our central bank here in the United States, and it has the potential to really move the market if they come out with policy ideas that are good for the currency, or looking to sort of we could go down a whole rabbit hole with this fundamental analysis stuff. Stay tuned on that. I've got plenty of videos coming on that and et cetera. But the main idea is that the Fed has the potential to move the dollar higher or lower. And you might say, well, why don't they want just a strengthening dollar? Isn't that good? Well, a lot of times central banks want a weaker currency because it makes them more competitive trade-wise. So there's this whole side of fundamental analysis that if you're a new trader, I wouldn't rule out, but I would say take the time to go learn it because it's a lot. But anyways, so we do have the Fed statement. So the idea here is that it is the primary tool for the FOMC uses to communicate with investors about monetary policy. Monetary policy basically is talking about interest rates, policy measures, things like tapering, which is have you ever heard here in the United States, the Fed a lot of times prints a lot of money. My dad makes a joke all the time. It's like whenever they have an issue, they just let the printers run, right? It's kind of true, right? They print a lot of money over there in the Fed. So that policy, if they're going to be speeding up printing, if they're going to be slowing down printing, it has the potential to move the US dollar, right? If you're printing more of a currency, it naturally is going to devalue the currency, right? If you're printing less of it, it is not going to devalue as quickly. So that's the idea. They're having a meeting, so that has the potential to lead us to think, hey, they're raising rates sooner than expected, or maybe they're not, or maybe they're going to be talking about reducing their spending or tapering. That could be a huge deal for the US dollar. So that's what I mean by central news for this week. It has the potential to really move the dollar. So from a price action standpoint, however, today, the dollar is looking incredibly bearish. We've got lower highs. We've got this pin bar here, and we've got to move underneath that trend line. So to me, everything is structurally bearish here at resistance. We held for the time being for the dollar. So it does look like we may have some more pullback here for the USD. We'll keep an eye on that. Let's go ahead and take a look at some of the individual currency pairs out there with the dollar in it. So the Euro USD still holding its own. The Euro is fairly weak. Let me go show you guys this too. I'm going to go over to the website, a1trading.com. I looked at the website analytics and I saw a lot of you guys were searching up A1 Trading and getting our website, which was really funny because I mentioned it yesterday on the stream. I said, use our site if you're not using it, but seriously, do use it. It is completely free. There's tons of tools here for you. I'm going to go over to the currency heat map just to get an idea of what the market is doing today. I use this tool every single day. So if you're not using it, and you'd like to use it, again, it's completely free. Just search up A1 Trading and bookmark our website and come back and use it every day. It would really help us on Google. But so the dollar here is a little bit weak across the majors, but truthfully, there are some other currencies out there that are doing worse today. You've got the Aussie, the CAD, and the NZD doing pretty poorly today. So let's also look at the euro. So we are looking at euro USD. So you can see that the euro across the board is doing pretty decent, and it's doing better today than the dollar, which is fairly red. Now the yen today is today's winner. You've got the yen coming in very strong, green against all other currencies here on the major eight. You've got the euro, losing to the yen. The yen is winning against the dollar. The yen is against the pound, the Swiss franc, the Aussie, the CAD, and the NZD. What this tells us is that if you're a day trader, sometimes people use the currency heat map as a day trader. They say, well, hey, today's trade could be to look for continuation plays on the JPY. If you're a swing trader and you want to be short on the yen, maybe this is an opportunity to look for pullbacks. That's different ways to use the currency heat map. But if you're a day trader, you might be looking to trade the strength. You might be looking to fade it. If you're a swing trader, maybe you're looking to fade it if you're a day trader. There's all different strategies, that you can work on yourself and figure out what you'd like to do. But the currency heat map just allows you to see from a visual basis where things are moving. So today we can clearly see the yen is strong and some of these bottom currencies are performing weak. The biggest loser of the day is going to have to be the NZD. So we'll take a look at that. We'll go look at some of the individual currencies, but I would like to continue with our US dollar idea, as we do have pretty big looming news tomorrow for the US dollar currency crosses. So let's talk about the euro dollar. 4-hour chart. It does look like price could be due to retest this level here at 1.188. We talked about this one yesterday. So this level was sort of a big deal for the sellers here. We saw sort of a nice little barricade. Every time price would pump up into that level, you would see quick rejection from the sellers holding their own here and really pushing that back. And one thing I want to say about that is that if you do have a situation where you're getting, one level like this over and over held by sellers, what that tells us is that if that level does get retested, you're going to have at least a thought or at least an attempt by sellers to see if they could hold that level. Is it a guarantee that they do hold it? No, but it is something to consider. And in my case, I would say that is possible and even likely to see some sell pressure come into the euro dollar should we come up to a level like that, because you've got a lot of sellers who are sitting there on the sidelines watching the same thing. That's the thing about charting, is that the only reason that charting would ever work in theory is that because a lot of people are looking at it and considering it in their own analysis. If none of us looked at charts at all and you just decided to buy the euro dollar or sell the euro dollar based on no charts at all, it would be really hard to visualize levels where you see selling going on or buying going on, right? One of the most ultimate levels, if you will, was the S&P 500. I want to show you guys this. This is just an example of a charting phenomenon that was kind of interesting. So if you look here at 2000, so we had the crash, right? Two crashes about a decade apart. We had the 2000 crash, right? Which was the dot-com bubble, where you saw the markets absolutely crash. It was a really, really nasty time in markets. A lot of people lost a tremendous amount of money. My dad even had his business really struggle during this time. They bounced back, fortunately, but a lot of businesses did not. So it was a really ugly time. Then you had 2008, which was probably even worse, right? People just got absolutely decimated in that crash, the real estate market crash, all that sort of thing. But let me show you guys this really interesting concept. What do you notice about this level right here? Price came all the way back up to this exact same level. This is a weekly chart. And people got scared and sold the market again. That is a really interesting little technical phenomenon. You have this level on the S&P 500 that got tagged and crashed, and then it came back all the way up to that level, tagged and crashed. I'm not going to say that the chart by itself was the reason that it crashed, but it is something to show like there was probably some hesitation from buyers at this level. And clearly you can see price came up, it tried to get higher, but ultimately it never made it back. And then we sort of had that falling out when Lehman Brothers crashed and all that sort of stuff happened, right? So that's the thing, is you start to, you pick up on these things. Of course, that's a weekly chart and that's a massive, long-term thing. But let me show you one more piece while we're talking about that. So that's the high, right? Notice what happened after, 10 years later, after we recovered from the next crash. We came up to that level, and this time we made a huge psychological statement. Basically, we broke above that level, we retested it, and we never saw it again. We never came back down to that point, right? So that's a huge deal for markets. you have these huge psychological support and resistance levels that do matter a lot to a lot of different traders. And that is why they sort of mean anything. If you have everybody looking at the same stuff and sort of coming to those conclusions, that's where it's big. So when we are looking at something like Euro USD, a huge psychological level is going to be this level down here. We've talked about this a few times, 1.175. Nice little psychological number. We're testing it now to see if buyers want to keep holding this low. But I would say watch for that break, because similar to what we just talked about with that long-term breakout, those long-term breakouts can occur on currencies as well, and they can also occur to the downside. So keep an eye on that for the euro dollar if you are a dollar bull, or if you think euro is headed lower. We'll keep taking a look at some more dollar crosses here as we do have dollar news. So the GBP USD, here it is, breaking back up above resistance here. This is a big deal for the buyers recently. So the other day we were talking about this level. I was wrong about this one. I thought we could hold. We did hold actually for a very brief period of time. We sold or we saw a price sell off just a little bit as it came up into this zone. We talked about this pivotal spot. You had multiple times where, buyers short sellers were knocking on the door. They were trying to push price lower, and then it just kept rallying, right? Every single time, was not able to break through, finally broke underneath here. And so on the retest, I was bearish. I did take a trade there and ended up taking a loss because it did not follow through to the downside. And sometimes that's just going to happen. So I ended up going short around this area. Price went up. I closed out for a small loss. And now it does seem like price has even held that level as a support level. So again, key spot, breaks out to the upside, retests it, and found support. So I would say that the pound dollar could be headed up to its next key zone, which I'm going to go ahead and mark as this spot here, 1.39, let's say, being the upper limits of that supply zone. So that's kind of your next zone, if you will, if you like to trade zone to zone, or all the fancy names people call them. But the simplest concept to me is just sort of the next big key psychological level there at 1.39. So that's my idea with the pound dollar. I think that short term, if you're a day trader, there may be some nice little upward, rally moves here to play out on. In fact, if we look at the 1 hour chart, very clean little chart to the upside. You've got this moving nicely for the pound dollar bulls, and maybe even a breakout right here today as we talk about this. You've sort of got this tightening little structure where you've got buyers pushing in and coming in and forming those higher lows, showing demand for this currency pair. And now it's just a question of, can we get the pop, the breakout, and move up to that next zone? It doesn't seem like a big move, but truthfully, from here to there, that's still 50 to 75 pips, let's say, if price were to make it up to that target that I mentioned, 1.39 at that next zone. If it hit 1.39, you're talking about 75, 80 pips. That's a pretty good sized move there for the pound dollar. And again, looking very bullish to me right now. Can that change? Of course it can. That's just how markets can turn around on a dime. But for the most part, I would say that the path of least resistance for the pound dollar to me seems like a push up to 1.39. Again, I would be aware, if you're a day trader, I'd pay attention to the fact that we do have major news tomorrow, which could drastically move the dollar for or against you. And it's hard to know exactly where it's going to go beforehand. So that is why we see such volatility. The reason you see these giant spikes in news events is because traders are trying to price in the newest data, and sometimes everyone's racing to do that. So it causes these ginormous spikes back and forth as traders and investors sort of try and gauge whether or not this is something is going to be truly bullish for the currency pair, for the market, for gold, for the S&P, whatever you're looking at, or not. Right? That's sort of the question as news comes out, and why people race to try and make that decision. So that's pound dollar. I do like this from a bullish perspective today. Maybe something like this, if you are bearish on the dollar today, is a good day for you, because we did hold support after a retest. Actually, obviously in hindsight, that was probably the nicer trade setup there. Was waiting for that pullback. The pullback came in. So if you're in that trade, congrats to you in the chat. That's a nice trade there if you're in that. Nick, do you trade big news releases? Charlie, I'm not a day trader, so usually when it comes to news, I'm not really like in there trading super actively, placing trades. I will trade around news. Sometimes I'll trade before it and hold positions through news because I am a swing trader, or I may even use the news as a way to enter into some of my pullback setups that I'm watching for. So for example, let's say that I'm long biased on a currency pair and then news shoots it lower, but I am still bullish on it and still willing to pick up a position. I may use that volatility to pick up long positions before the overall trend, in my case, hopefully continues, right? So I might use news in that way. Dade says, just a reminder to keep working at your trading. One day it'll pay off, and next year you won't be in the same place you are today. Believe me. Well, Dade, thank you very much for that uplifting message. Dade is a moderator here for the stream. He does a great job. We really do appreciate you, Dade. Thanks so much. And thanks to all you guys for being here and hanging out. The community has grown and grown and grown. We've met so many really cool, down-to-earth people. So appreciate you being here. So let's keep going here. So we took a look at the pound, the euro, and we took a little bit of a look at the dollar. What about the dollar yen? Because the yen today is really strong. So for those of you guys who are yen bulls, you're probably having a good day because you can see this thing seems to want to just keep going to the downside there. So, and what I mean by having a good day is that if you are long biased on the yen, remember that that would look like USD JPY. If you were long biased on the yen today, if you had long positions on the yen, the reason I say that that would be good, even though this chart is going down, is because you'd be long on the yen, but short on the dollar. Sometimes people get a little bit confused by that because they say, well, long on the yen is that looks bad because this is going down, right? You would want it to go up. Well, you'd actually want it to go down because you're shorting the dollar, long on the yen. Remember, when we trade currency pairs, you don't get the luxury of just trading one. You actually have to trade both. You have to short one and buy the other. So when we're looking at dollar yen, if you shorted this area, then you're looking like you're in a good spot there. Price sold off dramatically here. And, truthfully, where we just broke out of, I'm surprised that we didn't get more of a hold there. But with everything sort of concerned around risk off potential, right? People a little bit nervous around markets and possible resurgences in the COVID situation. You may have a little bit of flocking into things like the yen, those safer havens in terms of currencies. Now, why is the yen specifically so strong today? I couldn't tell you exactly. I don't know if they had any major news or anything like that. Let me just see if there's anything that I can tell you guys. Japanese yen moved to 110 as investors took a cautious approach ahead of Fed monetary policy decision, and as the Delta variant continues to spread rapidly worldwide. Okay, yeah. So, yeah. Okay. Yeah. So it does seem like this move here today is impacted by some of the fears around the Delta variant, right? Which is sort of what I was expecting, or not what I was expecting, but what I was sort of what I would expect if we see the yen strengthen, right? You're seeing JPY strengthen because people are a little bit cautious around the spread of the virus, right? If you have the virus spreading, people will want to take their money out of risky things, right? And where do they put it if they pull it out of risky things? Oftentimes it is putting money into the yen, right? So as that safe haven investment. So safe haven doesn't mean it always makes money, but it means that in times of fear, people buy it because it is going to likely hurt less, if you will. I've talked about that on stream before, but basically Japan, they have like a very stable economy relative to some of the other ones around the world. You see the yen strengthen a lot of times because the yen doesn't necessarily have this like booming, growing, fast, rapid economy, but it also has a very established economy. It has an older population. It has like a little bit more of a security factor than some of the more volatile, smaller economies out there. For example, like Australia. Speaking of Aussie yen, this one probably seeing a little bit of dip today. You can see it's pulling back just a bit. We are seeing the dollar pull back more because the U.S. dollar today is quite weak. I bet you the NZD JPY looks pretty bearish. Yep, so selling off there. So this is sort of a move out of the riskier stuff and into the safer stuff. Whenever you see this thing moving lower, so while we're looking at NZD JPY, is this anywhere near a buy for me? Well, again, we're sort of trending down on this currency pair. You are seeing this thing consistently put in lower highs and a continued concern around the Delta variant. So that Delta variant stays as although, we've been dealing with this annoying pandemic thing for over a year now. The reality is that if we did have to see further lockdowns like we're seeing in some places, if that does become a problem, trust me, none of us will be happy about it, but markets generally will move, if that happens, into safer assets, into things that are less risky. At least that's what we saw in 2020 on a major scale. We saw stock sell off. We saw risky currencies like the Australian dollar get decimated. So the Aussie dollar and New Zealand dollar are especially interesting to me because I know that in Australia, you do have lockdowns already sort of going on. And so that's why we've seen the Aussie dollar here, AUD USD, just get absolutely slammed. And this one, to me, truthfully, comes with a bearish bias. It's not that I want Australia to experience lockdowns or anything like that. But the reality is that just because, that is sort of the case, in my opinion, I think that the dollar is more of a buy than the Aussie at this time. Sort of depends how we feel globally around risk sentiment. Again, but if that Delta variant does become a continued problem and things are still slowing in Australia, then that could potentially be market moving to the downside. So keep an eye on that. If I do take any trades, I've been watching this one closely. If I take any trades, I will share them in our Discord group. As Dave just mentioned, there's a link to the Discord. If you would like to join us, you get access to any trade alerts that come out from myself and our team. So if I take a trade, you'll see the trade alert inside of the Discord. It'll get sent right to your phone or to your computer, however you have it set up. We have open chat rooms for people to discuss and work through different strategies and ideas together. And we do webinars throughout the week. So if you're not already in there, there's a link and a promo code down below in the description if you would like to join us. I'll pull it up just so you guys can see what it looks like there. I've been talking about my S&P 500 trade, which I am still in, by the way. So this is kind of what it looks like. So I'm, here's a trade that I'm in with the S&P 500. I've been holding this one for a while now. I took a pound dollar trade earlier this week that did not go so well. But whether I take wins or losses, I share all of my trades in my journal here. So if I take a trade, you'll see it in real time with an alert where I get in, my stop losses, all that sort of stuff, as well as our open chat rooms. We have webinars that we do with Coach Joe Bareka from Australia. Really nice guy, really great coach. He answers a lot of questions for members. So check all that out. If you're not already in the group, there's a link down below in the description, like I said, and there's a promo code for you to get 25% off of our gold membership if you use that code. So check it out. Don't miss out on that. And yeah, so if you're not in our Discord, like I said, there's your chance. Jump in there if you'd like. We'll keep going here and talk more about some of the other things that I see going on. But a big one for me on my watch list is Aussie dollar. I would love to see this thing retrace a bit further. Let me give you guys just a quick view here of this fib. So I do like this area. Talking about the 50% level, if we extend this out just a little bit, you've got this bigger 50% retracement that price could come into play yet again. You are seeing a retracement. It's not this major strong retracement, which is actually what I like a lot. So it's sort of this weak bullish retracement that we're seeing right now. We are seeing some higher lows, but I'd love to see price poke up into that 50% retracement for a potential short. And that may be something that we get tomorrow on Fed policy, depending on what happens with the dollar. If you get some weakness on the dollar, that could push prices higher enough on the Aussie dollar for potential short trades. So that's something that I am watching for myself. And like I said, if I take any trades, you guys will see them if you're inside of the Discord. So keep an eye on that. What is Frank doing? Oh, Frank got trailed out of CAD yen, did he? So Frank was long on CAD yen. He caught almost the exact bottom. Probably he got in at 86.34. 86.34. So he got in right here. Right here. I think he must have gotten in right around there. So he bought right around on the low. So a nice move there. If you caught any of the yen movements, they've been very, very strong recently. But now with the yen giving back, it does look like Frank already took his profits there. So he's out of that trade. Don't blame him there. This thing does look like it may have some more downside overall, but he caught the swing back after that oversold signal there and coming into support on the higher time frames. So nice little move there on CAD yen. If you're watching this currency pair, like I said, there is some structure to keep an eye on in terms of like resistance and some of the zones that we're seeing some struggle at. You've got levels like 88.5 and 88, both of those big psychological levels. And then you've got levels up here. So a little bit of resistance there for the CAD bulls there on the CAD yen. But, if we start to see this thing break out, I would like to be long again on this. This one is heavily impacted by oil. We'll take a quick look at oil, U.S. oil. So U.S. oil, it has been recovering. So we did form that low recently with the stock market dip. We saw oil come down with it, now finding some support there off of the bottom. So we will have to see if this thing can rally back to the tops, but we did form a really high point there up in early July. I'll scroll out there just for you. So oil has been on an absolute, run to the upside. And this has been big for the price of the Canadian dollar as well, because of Canada's exposure in their economy to oil. With the oil market rising, you tend to see the Canadian dollar do well also. So we're seeing the Canadian dollar sort of mirror some of the price action that is going on with the oil market right now. So if you do see, or if you think oil is likely to go higher, maybe you keep tabs on the Canadian dollar and Canadian currency crosses. You do sort of have this one counter trend thing to watch out for. You did have this higher low. Can we break above that? That may be an early signal that we're headed back to the highs. I would keep an eye on that if you're looking at oil, but also on the Canadian dollar and Canadian currency crosses. So a couple things to look out there for. Let's take a look now at gold, XAU, USD for my friends who trade it. Gold continuing to be a stubborn little guy here, just back and forth. Does not want to move very much. It gets into this funk every once in a while where it does not move. And I do want to just pause here and let you guys know that, okay, if you're somebody who is watching gold and you're saying, hey, this thing is not moving a lot and I want to make money on it, but it's not moving. Let me just give you guys a quick short tip about this. A lot of times, some of the biggest trouble that I've ever gotten myself into in trading is out of boredom, right? Sometimes the markets are just not moving. Sometimes the trade is just not there. And you find yourself forcing trades because you want to make some money. You want some excitement from the trading. And that's a really dangerous path to go on. Let me just tell you that the most successful trading that I've ever had has always been from super boring, same old trading styles and trading approaches. Okay. If something is really exciting for you, if it's like an exciting event to trade, right? The thing to be afraid of, or not afraid of, but to be aware of, is that if something is really boring and repetitive, it means that you're being consistent. If something is really exciting and uncertain and new, you're likely not doing something consistent, and more so, you're more closely to gambling. So if you're bored in your trading, if you're like annoyed that things are not moving, I would just say maybe just take like $50 and go gamble online or something. Cause you just need to get that gambling mentality out of your head, because it's not going to suit you well in trading. When we look at gold here and we see that price has been basically struggling to really get anywhere, I would just say, hey, if you're watching gold, wait for the volatility pick up. Don't force your way into trades, because again, when gold is moving, you will know about it. Here's gold moving dramatically, right? Here's gold trending beautifully to the upside, right? Here, in my opinion, this is where I'd like to be trading. That's where I like to be a participant in the market. But over here, over in this sort of stuff, what are we doing? We're just moving back and forth between a very, very small channel, and volatility has dried up dramatically, right? So for me as a trader, that's not where I want to be trading, right? I'd like to be trading on a breakout. I'd like to be trading on momentum picking up. So just a little note there for you guys, for those of you who are struggling with that, if you're getting bored in your trading, just a tip: being bored is good in trading. That is the right thing to do, in my opinion. Those are signals from your brain. They don't feel right, but they are right. Because if you're bored in your trading, you're probably being more consistent. If you're excited in your trading and everything is scary and awesome and super ups and downs, right? That's more likely to be gambling than anything else. So just a little tip that I've learned through my time as a trader, and some of the painful moments that I've had have come from wanting excitement and chasing something that's not there. So little things for you to pay attention to. Thank you, Dade, for the update. For those of you guys who are joining us just now, we have taken a look at the dollar. We've looked at euro, the S&P, the pound, the yen, the NZD-JPY, the Aussie dollar, US oil, gold. So rewind to check all of those out. Dade, thank you so much. Appreciate that, man. Please clarify for what it means when JXY index is bullish. Does it mean that all yen crosses are a sell? Well, it means that they are likely headed lower unless there's something stronger, right? If you have JXY going up, but you have DXY going way up, then you would expect dollar yen to actually be going up, right? It's sort of just all relative. All of it is like sort of just proportions. With the yen strengthening today, though, you are seeing a lot of those crosses move lower. Like I mentioned, one of the bigger losses today is that dollar yen gain. We saw all of these gains here, half of them wiped out today. So if you're bullish on the dollar yen, maybe there's a pullback here. But for me, this lower high is sort of scary, especially with Delta variant concerns rising. Dollar yen could be headed right on down through to the lows. In fact, I'm cautious to do it, but there may even be some short-term sell setups that I would like to look at for the dollar yen. Maybe if we see pokes back up, I could see myself looking for something there. But of course, if I take any trades, like I mentioned, they'll go in the Discord. You guys will see about them. I share all of my trades. So does Frank, Patrick. We do weekly forecast reports and research for you guys, webinars, chat rooms, all that stuff. So if we take any trades, like I said, you'll see them inside of the Discord. If you're not in the Discord, the link is down below in the description to sign up on our website. It's the first link down there. So check it out. Okay, so what else can we look at? Can we look at pound yen? Speaking of yen stuff, what about the pound yen? Pound yen is really, really trying here. You're seeing this thing, which it consistently has been putting in those lower highs. We got a little bit of a breakout above that trend line, but now you're seeing price just back here chopping, thinking about it, back and forth, saying, I don't know what we're going to do. Are we going to step away? Are we going to rally higher? Like it's sort of just at a decisive moment here. I mentioned yesterday, for me, pound yen, I'd love to be back on the long train with this thing, but I've got to see it break up. I've got to see breakouts here that show signs of continuation. For me, it's a little early on to decide if this is a buy. I would say you are poking up into levels that look a little bit bearish, especially with that Delta variant and potential yen strengthening around the corner. Could see pound yen more as a short-term dip. And the thing that I'd be looking for is, before I want to get long, I'd love to see this thing show some breakout strength, right? Show some higher highs and higher lows. That's what I'm looking for if I'm going to be looking at pound yen on the long side. So where do I see it going? Well, I don't have an opinion right now. If anything, if yen strength continues, I would say right now it seems like the path of least resistance is pulling back. But like I said, my favorite trade here would be to see if we can break out. If we break out, then I'd be looking at potential long setups. Okay. Casey, good question. So Casey asked that the currency heat map on our website, is it based on the daily time frame or the 4-hour time frame? Well, it is actually based on the daily time frame. So it uses the 1-day chart and the gains and losses of the specific day on each of these currencies. By the way, you guys, I mentioned this earlier, but if you're not already using our site, it is completely free. We've got a ton of tools here for you. We've got an email newsletter that you can join for free trading tips and ideas and stuff like that. So I want to encourage you guys real quick. I'm going to drop the link to the site because that's how much I want you guys to head over to this. I'm telling you, it is a free resource. Use it for your own purposes. I just dropped it in the chat there. So I want to encourage you guys, if you haven't already, head over to a1trading.com. You can read up on our latest analysis being put out by Frank, who is one of our analysts here. We also have Bart writing some stuff. He's a great analyst as well. So use that link, a1trading.com. You also have access to trade ideas from us, retail sentiment. So if you want to see what traders are up to, you can check it out here. You can see, for example, that the euro dollar is long biased by retail traders. Pound dollar is short biased, right? Dollar yen is short biased. So you have all these different factors coming in. You can also check out the COT reports so you can read up on that. Again, tons of 100% free resources for you to use, and you can join things like our newsletter, etc., to get more stuff from us. So check it out there on the site. With that said, guys, I am going to wrap up the stream here. Thank you very much for tuning in with me. Appreciate you showing up. A lot of you guys come in every single day. So if you're new to my channel, before you go, do me a big favor, hit that subscribe button down below. And if you click the notification bell, you'll get an alert for when I go live next so that you can come back and hang out with us next time. Last thing I'm going to ask you to do is these streams are 100% free. If you would hit the like button down below, it would do a lot to help what we are trying to do here, which is create free trading content and coverage for markets 100% free for you. So if you enjoyed it, like I said, leave that like, and maybe we'll see you back next time. Thank you guys for being here, and we'll see you back tomorrow.
I know you were expecting Nick, but my name's Julie and I do the real work around here. I wanted to take a second to thank you guys for watching the show and tell you more about some free content that we offer. One of the things that we offer is a free email newsletter. So if you click the link down below, you can sign up for free market analysis, trading tips, and exclusive offers. Every once in a while, someone here at A1 Trading takes a crazy trade, and you'll be the first one to know about it. See you guys next time.